Okay, so in the last lesson, I was literally just using the same chart. We're going to continue on this. The next lesson here is using multiple time frames. The last lesson, we were literally just talking about using multiple time frames, and I was breaking down how you would progress. Essentially, what you're going to be doing is you want to draw out the levels on the major time frames. You can make money using only the 15 or the 5 or the 1 hour or the 4 hour. It doesn't matter. But when you start combining multiple levels, that's when the strategy gets really, really powerful. So you can see potentially where levels might line up. So that's why I've got multiple charts on here. I know you can't see I have a 2 hour here. I like using the 2 hour. You can't see the 2 hour. It's behind my head. But if I draw, say, a level on the 4 hour here, right, that's going to line up with something on the 1 hour sometimes, right? Not today, right? But here, you can see that. So a lot of levels are going to line up. And what you really want to do is, right, I've drawn an untested level on the 4 hour there, and you can see how that 15-minute went to it, right? And when you start your day, you're going to be looking higher time frames. I want you to look at the 4 hour. I want you to look at the 1 hour. See, look at this. There's a level here on the 1 hour, right? You can't see that on the 4 hour here. I'm jumping back and forth from charts. 4 hour on the left, 1 hour in the middle here. You draw that, and you can see where the 15-minute hit, right? So you need to be looking at every single level for this to really start making sense. So when I see, I'm going to just break down kind of what happened sort of today, right? Is I had a long, first of all, right? When I first started the day, I longed the very open, and we longed it up to the top. Why? The trend was up. We were regaining this zone here, right? Regaining this zone here, and we were just wicking out, and I figured we would be targeting that top. So this was the trade. That was the open trade, right? Basically took a little wick down somewhere in that range, right? And I used that level there, of course, right? Knowing that that's probably where we're going to buy up, and I'm going to target there, okay? Now, the next thing I did was I seen these levels on the higher time frame. So that's probably an exit for us, right? Because you can see how those are untested levels of significance. They were tested, but the next level up is a bit higher and it didn't actually hit it. So then what I wanted to do is, after I saw some closes for the 1 hour and the 4 hour, so that close is right about here, right? 30 minutes in rather. And you can see the 4 hour doesn't show too much significance. It's a spinning top, a little bit uncertainty. I need to delete some of these lines. So we have uncertainty on the 4 hour, maybe we'll drop down to the 2 and the 1, right? So the 2, I'm going to put the 2 on the top here so you can see it. So the 2 actually showed a failure to make that new high there, right? So I actually ended up taking a short, and I'll be honest with you, I took a loss on this short, even though it played out, okay? Because I did end up closing it. So again, why did I take a loss? Well, because my area I didn't want it to go above was here, and when I see that close up there, that's really bullish, right? Which means I thought the next level up is going to be targeted, which was this one, which they targeted later, right? And I don't know for sure that they're going to reject off that level. So if I was already short off of here, right? If I already shorted off of there, and my stop is somewhere in here, and we closed in that area, well, I'm just going to exit for a small loss. I think I took a few $100 loss, okay? Instead of letting it go double the distance, what I can do is I would wait to see if I can re-enter. Now, unfortunately, in this scenario, it just went right to where I wanted to target anyways, right? Which was, this level on the 1 hour. So you're drawing all these levels on the 1, 2, 4, 15, and then you're watching the progression of the trade on the lower time frames, watching to see how it's reacting based off of those levels that you're looking for. Okay. See, now that we've got these closes on the 1 hour, you can see, okay, we've got the 1 hour closing really strong here. We've retested that area. And if you weren't watching the 1 hour, this would look pretty bad, right? Of a close, right? Because you're re-entered this zone. So you probably think we'd be coming back down here. But the reality is you've got this massive, massive close candle on the 1 hour that tells you for sure you're probably not going really, really deep. Maybe what you'd do is you'd place an order down here too, right? A little bit deeper. So maybe you'd place an order there. You'd place an order. So this would be your whole hunter zone, right? Is from that 1 hour all the way to the top there. So you can see this level on the 1 hour. You can see this level on the 4 hour. You can see this level on the 1 hour. And that would be your whole zone. And you wouldn't get every single one filled. And this is why I say you can scale into your trades. And then from there, you're going to be targeting those new highs, right? So wherever you get entered is good. If you get entered really, really deep here, well, maybe you don't need to target as high. Maybe you only need to target there and still make profit. But if you hit it here and then it explodes, just as good. You're still going to get just as many pips. It doesn't matter how deep it goes because you're going to get just as many pips, right? That's how you use multiple time frames in order to get a better confluence of how the trade's going to pan out.